minutes seems like a long time. 5 minutes seems like a long time to wait for this amount of talent. This is like
it's borderline cruel. Borderline cruel.
You know,
We can amuse ourselves.
Look at the
It wouldn't be
audience
the first show
count.
we amused ourselves.
Yeah, it's like old days.
And Ben has hair, so we're already getting up a notch.
yeah, but he takes it off at night just so that you know.
Yeah. Points.
David's like my older brother. He just always has to like pepper it in, you know.
much older brother.
You have to pull a trumpet and like yank on it so that everyone knows it's real. Oh, we're also jealous.
Look at this moving footwear, Benjamin. On
Oh,
cloud, up 7%. It's glorious.
I was excited that I was going to make up some ground on you, and then I saw where the deck chart was, and lead is maintained, if not maybe expanded.
Yeah, a little bit. You know, it's all about Swiss shoes this year. That's all people want for Christmas.
What? Where's the Skechers at, though?
Skechers is kind of flat.
No, it's down. Oh. Lead has been widely expanded. Oh no.
See, that's the thing. Last night I was watching the chat, but I was out, so I was so jealous of the after hours trading you guys were talking about. I was like, oh, I wish I were at my desktop. And now I guess I should thank for little mercies.
That Deckers, that was the thing of beauty, though, man. And just not even trying to humiliate Nike, but doing so sentence after sentence after sentence. Direct to consumer, amazing. Holy crap, it grew 20%. God, it's elite consumer. Good Lord, we're selling $190 running shoes literally as fast as we can. We can't even make them fast enough. It was everything Nike is not in 60 minutes. It was glorious.
I'll tell you what, thank you again for that Capri. I bought that at $20.15, and I had an offer at $23.50, and I woke up and I was filled in one of the greatest overnight trades in a long time.
Beautiful.
In this consumer theme, you know, the things that need to be financed are still disappointing. I don't know if you saw Mohawk last night, but they're down 11% this morning. Another durable goods consumer. Boats, cars, RVs, houses, they're not selling.
Yep, you got to be in just the right place, and that right place is Swiss running shoes.
You know what though? That stuff has been on its butt forever. Jeff can tell you, furniture's been garbage for how long? And so those things are cyclicals, right? Like they'll get a bottom before the actual bottom in fundamentals usually. Like I'm sure
Resco caught another upgrade. Resco is still working despite just a batshit Willy Wonka crazy quarter. Just no sense at all to it. And that stock is still working, way ahead of any recovery in $6,000 end tables.
Yeah, Lovesack, you know, the innovative company it is to put speakers in couches.
In bean bags. It's a beautiful idea.
That thing,
You're taking a $5,000 speaker and stuffed it in a bean bag.
Oh.
Orders for durable goods decline this morning, by the way. Probably on Boeing. And the housing data over the last 2 days was not good.
Just so you know, David, I know you're curious. I'm also, now that the NBA season started, I'm buying Victor Wembanyama rookie cards.
All right.
Funny, I told my brother-in-law to do that last year because he's a basketball card collector guy. And I told him, buy everything you can with Victor Wembanyama. He's going to be the best player ever. Guy's unbelievable.
Yeah, hey, Ben, do you have a basketball rookie card?
The two kid from
How much is a rookie card going for, Bob?
It's top card if you want to get like the gold 1 of 1 or the 50 to 100 grand.
Yeah, but I want graded 9 or 10 only.
Well, if you want the 1 of 1s, you're going to pay 50 to 100. If you want,
I don't want a 1 of 1 actually. I want to get a 1 of like 10 and then destroy 9 of them and be like, haha.
Nice. The Goldfinger clock.
We should all get Ben Bray's basketball rookie card.
Yeah, that's not trading very well. It's kind of trading in the dumps these days.
He has hundreds that he'll sell to you.
It's a supply issue and a demand issue.
Well, good morning. Are we starting live now? Let's
We are.
go. Let's get
Rock and
this
roll.
going. Let's start on a Friday, end on a super high note, and I emphasize high note. So we have today Charlie Peabody, Jeff Mackey, Kevin Bakes Baker, Bob Morris, Ben Bry, and I'm David Maris hosting today. So Charlie was away. So Charlie, first, you were away for a week in the mountains of Colorado, and you came back not to talk about financial stocks that you usually talk about, but to talk about cannabis stocks. We're not going to ask how that came about, but on that long vacation. But maybe just tell us, what are you thinking about cannabis stocks at this point?
Yeah, I did end my vacation on a high note. It was a great lift, being in the mountains of Colorado. But anyway, yeah. So I wanted to highlight the cannabis stocks because this is not for the faint of heart, and certainly not necessarily a trade for next week or next month. Although there are some catalysts short term. And the two names that I think you should be looking at are the cannabis ETFs, MSOS, and then TOKE, TOKE. And the reason I think this may be timely is because there is a hearing coming up in early December where the DEA is going to be presenting a case for rescheduling cannabis from level 1 to level 3, which essentially would be the start of decriminalizing marijuana. Um, and if we go down that route, and there's likelihood of increased distribution and acceptance of this by the broader public. But more importantly, associated with this, this past week, the AICPA recommended to the IRS that they clarify some of the rules on tax accounting for a legalized substance such as cannabis. And this is a very important potential ruling because it would allow many of these domestic companies to start deducting standardized, deductions and expenses. So some of these companies pay as much as 70% in taxes. And so there could be a huge profit lift if the recommendations from the AICPA are accepted by the IRS. On a political front, we know that Harris has spoken out in favor of legalizing marijuana. The Biden administration started several years ago to the administrative process to legalize marijuana. The Department of Human and Health Services has followed on with that. So now it's in the hands of the DEA in this court ruling, or court hearing, I should say, coming up in early December. Trump is the wild card in the sense that he has spoken out in favor of a Florida referendum for legalizing marijuana. But if he appoints Jeff Sessions as his attorney general, that's a much more conservative leaning. So, Trump sort of flip-flops on this policy. So I'm not sure where he will come out. But there are some, the bottom line is there's some legal issues that are going to be, moving forward here in December. There are accounting issues that are very, very favorable. I really want to emphasize the potential for the accounting benefits. And then there are the political wins that seem to be supporting legalizing marijuana. So I think the domestic stocks are worth looking at. If some of those things fall into place, then we're probably going to get bank financing supporting this industry. And that's very important, as we just saw with the uranium and nuclear stocks, when the banks came in with support for financing that nuclear industry, that had a big impact on the stocks. And then, like crypto, a lot of the domestic names in marijuana cannot be traded very easily. And so if it gets legalized, I think you're going to see a lot more trading, which helped, the crypto stocks take off. So I'll leave it at that, David.
I would imagine that there's a lot of different things that are going on, not with just that hearing, but things like interstate transport. Like if you have a production facility, a grow facility in one state, but you have dispensaries in other states, right now you can't go from one state to the next. So maybe something like this would open that up and allow for more expansion. Now, Trump will be on Joe Rogan today. And if it's going to come up in any place, I would imagine it will come up on Joe Rogan's podcast. Not that he needs more people.
Joe Rogan have a podcast where he was smoking marijuana with Elon Musk or someone like that? I forgot.
Exactly.
A long time ago.
Yeah. So, now there was, before I jump to the next speaker, there was some news on Wells Fargo. What was that about? They may have to pay. They may have exposure to some bad loans.
Yeah, Reuters carried an article where there was an interview with Charlie Scharf, the CEO, and he acknowledged that they may have to take another $2 to $3 billion of write-offs in their commercial real estate portfolio. It sounds like big numbers, but really it's a non-event. Wells Fargo has already absorbed about $1.2 billion of office loan losses, in the last year and a half. They have about a $2.4 billion reserve against an $18 billion portfolio. So you're talking about 11% reserve ratio there. My guess is they'll have to bring that up to 15% over time. That's something they can easily absorb within the context of their earnings power. They generate about $4 billion of net income a quarter. So I don't see it as a big problem. That's kind of the message they were trying to give, that even though we face these losses, it's not a big issue.
Okay, so Wells Fargo, not a big issue. On the cannabis, you're saying, hey, listen, for a long-term trade, go long these two, MSOS and Toke. And then Kevin, I want to jump to you for a second on the technicals for those cannabis names. Is there anything that we should be alarmed about, or is it supportive of kind of taking a medium to longer term view?
Yeah, and I admit the limitations of technical analysis and biotech binary events. It's of questionable utility. I've proven that many times. But I do like the fact that you've had the euphoria being completely wiped out over the last 4 years, and Toke in particular, TOKE. This is Emma. Yeah, Toke is the best looking chart out there. If it gets above $6 in any meaningful way, now as we've seen, there's a lot of false breakouts that happen because there's euphoria over some political ruling or court case or what have you. But above $6 and the volume picks up, I would make your position full if the fundamentals that Charlie lined up come to pass.
Perfect.
Yeah, and those are still to be seen. I admit that, but the nice thing about that chart, Kevin, is there's an old adage in technical analysis: the longer the base, the higher the space, and that base has been going on since I think early 23, if I recall.
I want to thank Luis Yamato for joining us. I appreciate that.
That.
I don't know who that is, but we're going to move on to
the dark side.
We'll get back to Kevin on some silver miners in a minute. But Jeff, you're kind of riding a bull of a holding. But tell us about TKO Group Holdings and this reaction from a deal that they announced. What should we be doing with the stock, and how should we think about this deal?
We should be buying the stock, David. You can't spell Toke without TKO. TKO, they own UFC, they own WWE, they own now IMG, the pro bull riding organization, whatever that is. But the through line is just young men kind of hanging out and enjoying a little relaxing substance and watching a lot of streaming stuff on television, guys in tights beating each other up, but also the enormously lucrative rights selling and event running that goes up. You said the stock went up 9% in smoke yesterday because it's kind of an inside deal. It's a complicated spin-off of Endeavor, but what it is, again, is they're selling the rights for things like WWE. Does that seem like a great business? Well, it's a huge business. They do about $3 billion a year in revenue just from WWE and UFC. Their adjusted EBITDA is $1.2 billion. So incredibly profitable, really lucrative business. It works perfectly for Netflix. Just signed a deal. They can't get enough streaming content. They mentioned WWE by name in their conference call last week. UFC is a constant agent they're just a force to be reckoned with everywhere they go, across the world, across every streaming platform. And now you have TKO that's right in the middle there. And so they're sort of an arms dealer with their own army it works out really well, and for them, they're just in the middle bow tie position for what's the fastest growing segment of streaming. And if you drew a Venn diagram of people enjoying a token, hanging out, watching Joe Rogan announce UFC for about 5 hours, it's a real thing. And this content, it also works for the content that they make for Netflix. The WWE Mr. McMahon docuseries, it was the 6-hour history of professional wrestling that you never knew you wanted to watch. That drew 4.9 million viewers, 28 million viewing hours the first week it was released on Netflix. Wrestling is a huge business. This live streaming is enormous, and TKO is going to win. You don't get them on a discount for 9% often. It's not necessarily the cleanest story or the cheapest stock, but man, it generates a lot of cash, and they're going to kick it back to shareholders.
So what's going on? Why are people worried about this deal? Is it because it's like, okay, it's something different from what they've been doing, or is it management?
It's less that it's different than it's pretty inside baseball. They're buying assets from their majority owner. They're paying stock. So, you're kind of counting on the advisor. They mentioned, I think it was Morgan or something was the advisor on the deal. Advisor's doing a lot of heavy lifting because this was just a handshake deal between two sides of the company. Now Endeavor itself is being taken private by Silver Lake. And so it's really just kind of a mop-up operation. That's obviously a red flag. You obviously got to be concerned, but the cash flows are there that cover a lot of mistakes and kind of cleaning up this sloppiness. And it all speaks to just getting more focused on selling streaming, live, sportsish content, documentary and makeable content to all the streaming services and being able to go to the highest bidder. And that's where TKO is positioned. It's a beautiful spot to be in.
And you mentioned they're going to do a $2 billion buyback as part of this deal. Have they? Do you have any estimate of like how fast they can do that? I mean, do you think it will be done this year?
They're going to do that over the next 2-3 years is the number they gave in the call. So it's going to take time. They've got a dividend. This company's been public for less than a year. And so we're still kind of streaming things out. But, they have a nice history of returning cash to shareholders where they can. And again, they took the margins on WWE up to 55% last quarter, which is just a really good business. I mean, that was up from like 40 something before. That company, WWE, traded at the McMahon discount forever. TKO was able to come in there, buy the entire operation, and really clean it up. They had a lot of skeletons in the closet, and now those are gone. And that is a huge driver.
So announcing the deal and announcing the dividend at the same time is kind of a signal of, hey, we're going to start to pay a regular dividend. It may not right now be a high yield because they're doing such a big buyback, but they're kind of signaling we're going to return cash to shareholders.
Yeah, and they're signaling just their confidence in their own cash flow. So what's really misunderstood about these stories, in large part because of the carnival barker aspect of professional wrestling and UFC to an extent, is that they're really stable businesses. You have 12 or 13 live events for WWE every year that are bringing in scores of millions of dollars at incredible margins. The UFC is good for a pay-per-view per month. That's going to be a star business all the time. But man, it's a big star business. They're going to do about $1 billion this year. So, you've got really stable cash flows, and it's just the management's way of saying, listen, we're fine. This is a stock deal. There's a little whiff of onion coming off it, but it's not going to take out their cash till, and that's not really a problem for anyway.
Yeah. And also, this is going to be another one that's probably mentioned kind of tangentially on the Joe Rogan call, because you have UFC, Trump, and Joe Rogan. So who knows? Maybe he'll even talk up your deal. But
they're going to be bringing in eyeballs. Yeah, he won't hate on the deal. It's a lot of insider baseball, but Joe Rogan of all people recognizes that UFC is a really, really good business, and you can like it, you can hate it, but man, he knows what Dana White, the promoter there, he kind of knows what's what and what people want to see, and has a history of showing it to him.
And he's tight with Trump, so who knows? Maybe baseball will fall by the wayside and UFC will become our new national pastime. But with that, Kevin, you wanted to talk about your mining for gold in silver miners. So tell us about Global X Silver Miners and what we should be thinking about there.
Yeah, it's not even Christmas, and Burl Ives is warming up, and it's fabulous. Silver and gold are acting great. I bought the AUMI gold ETF on April 1st. This is the silver ETF, SIL. It's the best one that I found. I bought it April 5th. I like to keep my feet to the fire and show exactly what I'm doing. That's what this red arrow is here, and I'm up 22%. It's 12% of my portfolio, and it's buyable here if you get a decent pullback. The relative strength line is hitting new highs. The volume is picking up. As Ben has showed in other parts of our service, the commodity itself has a beautiful chart with two peaks at 50. We're up at 33, 34 spot right now. The commodity itself, you break above 35, there's very little resistance. You go to 50, and you have beautiful operating leverage. The top line screams, expenses don't go up as much, the earnings explode, and everybody looks around and say, why don't we own any silver? It's because it's about 0.07% of the S&P 500. I'm making that up, but you get the idea. And I see this line here at the old 83 high for the ETF as attainable over time, so a double coming up, in my opinion.
All right, so when you have a double coming up, one of the things that I don't like is when I say, because I catch myself saying it all the time, I think everyone does it, which is, yeah, on a pullback, I'd buy some. It's either, but because we're all like a little bit hesitant, we all want to be buying things at a lower price than a higher price. You mentioned that. Where, if it's going to double, shouldn't I just buy it today? Or what is your price target? Like, where do you say, not price target, where is your buy target that you say, you know what, I'm going to wait to here because I already own some. I'm going to, if I have to average down, I'm going to average down here. What's that number?
Yeah, my discipline is very straightforward, and I've earned it over a lot of years and a lot of cuts and bruises. I bought the new high back in April 5th, and I was full. I bought 10% then. I'm up 22%, so it's 12% give or take of the portfolio right now. And whenever I see a new buy breakout like we just did, I multiply times 5%, 1.05. If it gets below that on lower volume than average, then I pick it up. This discipline helped me with the Chinese stocks because you didn't get the 5% pullbacks. And frankly, as you
slow down one quick second. 1.05 times the new high. So you're going to buy it at an even higher high.
Yeah, but not more than 5% above the high. And I'm not buying this now because I'm full. But I'm saying for our subscribers,
you're saying for me. Let's just leave it to me, not for others, because we're focused on what we're doing. Okay, got it. So going to buy it a little bit higher if it holds this. If not, we'll where are we buying it the next if it kind of drops down?
Yeah, I mean, I'd buy it at below 40, 39.75. But anything below that, I'd buy it.
Got it.
David, can I make an anecdotal observation? Because I was talking to a billionaire investor up in Canada who invests in the physical mines. And he was saying that around the 35, 37 level, he thinks there's going to be some more production or hedging done. So we may run into some resistance here short term. And I want to emphasize short term because I think Kevin is absolutely right. This silver is going a lot higher. But I'm not a buyer at these levels. I'm a buyer on pullbacks. And I know you said if it doubles, you shouldn't worry about pullbacks. But I think the pullbacks here are coming.
Got it. Well, let's move on to Bob Morris, who has gas, I hear, but natural gas. Range Resources, tell us about. I've wanted to make fun of Bob for a while, so that checked that box. Bob, tell us about Range Resources. Should we be buying it, selling it? What should we be doing?
Yeah, so I don't have gas yet because I haven't bought any of the gas things that I talked about last week. I'm getting a little bit anxious here, and hopefully I'm not being too cute. But Range Resources was the first of the oil and gas producers to report third quarter earnings. They reported on Wednesday. The stock outperformed that day really on two things. One, they released their full year production guidance, which this was driven by continued capital efficiency improvements, which I think we'll continue to see as a theme here again in the third quarter. The second thing is, and what's unique about Range is that 32% of their production is actually liquids, and that's ethane, propane, butanes plus. And what's unique is they're the one company that exports 80, 90% plus of their liquids and gets a higher international price for that. and that's unique that other companies don't do. So that sort of pushed the stock up here. But the one thing that's important, we talked about this last quarter, is with regard to natural gas, is they highlighted how they continue to build an inventory of productive capacity. So, in other words, they've got 8 to 10 wells that they call ducks, drilled but uncompleted, that are sitting there waiting to be completed and turned on once natural gas prices rise to a level that they deem sustainable and at an appropriate level to begin to raise their production. Now, they won't put what that price is, but that's something you're going to see from all the gas focused names. And we'll hear from the other big gas focused names, EQT, Antero, Extend next week. But that's key because we talked about that last quarter, that all these E&P companies are holding this inventory of production that if gas prices pop, in our opinion, we think the range is 3 to 350, they're going to begin to turn that production on. So that sort of acts as a bit of a ceiling, so to speak, on the gas price of probably around 350. So in range, about 10% of this year's capital budget is directed toward building that inventory of productive capacity. So as we look at the names here, we talked last week that we're not stepping up yet because we think big upside to natural gas prices is really a weather bed here on the winter weather near term, and we're keeping an eye on that. And even Rain said, look, as far as turning on this productive capacity and viewing what is a sustainably higher gas price, we're watching the winter weather. It's going to be very warm here in the Northeast over the next week into November. So that's sort of interesting. We're going to start out with a warm winter. But, as far as the gas names, I do want to own them at some point. Everybody talks about the uptick in demand. There will be a nice uptick in demand from both data centers and LNG exports, but more toward the latter part of next year. And that uptick in demand can be met just by the pure E&P gas-focused names putting this additional productive capacity into the market. So bottom line, hopefully, again, I'm not being too cute. I'm watching the names. I've got my list of Range, Equitable, Antero, Extend, watching those to buy those when the time is right. But I just don't feel it's right yet. I'm still watching, and we're keeping an eye on those names. And we'll learn more about what these companies are doing next week when the rest of the gas-focused names report earnings. I think Bakes has some comments here on the chart on Range as we kind of watch it as to where we look to buy it. But
yeah, I don't have the chart. I'll send that offline. But 33.21. I want to see it close above 33.21, which is a couple of bucks higher. I want to see it above the 200-day. The 200-day moving average is like a nightclub at 3 o'clock. Nothing good happens there if you're below the 200-day moving average. So 33.21. Now the volume is picking up, which I like. And both on the daily and the weekly. So there is something going on, probably the production guidance that you talked about. And but 33.21 is where I get really more interested.
And Bob, on the natural gas thing and the weather, is that sentiment related to the stocks, or is there really a demand change when there's a warmer winter for one region?
No, it's typically across the U.S. And what happened is we had a record warm winter last year. So the amount of gas we have in storage, to pull out of storage to supplement production in the winter, because demand exceeds what we can produce in the winter. So we supplement supply with pulling gas out of storage. We still have this storage overhang going into this winter. So we really need a cold winter to work off that overhang and kind of bring inventories down to more critical levels coming out of the winter to see a really big move up in natural gas prices. And that's what everybody's eyeing here and watching. And, if you're, some climate people will claim that we have global warming and we're never going to have another cold winter again, but that's not the case. But to your question, it's across the U.S. You burn more.
So it actually is a demand. It is a demand thing, because I just figured the Northeast is so small, and there are other uses of natural gas other than just heating. So, but okay, I got it. I learned something new today. So, well, let's go to Ben Bry now. Ben, you're coming off a high in a little bit with a flying taxi company, Joby. What's going on with Joby? Has it crashed, or is it just a soft landing here for a little bit?
It's like a helicopter. You never really know if you're safe. It's kind of going up, it's going down. You might catch a gust of wind. Okay, so just to remind everyone, last Friday or last week, Nadine and I had the head of engineering at Joby Aviation on our podcast. Just think about it. And I thought it was a super interesting idea. My buddy Tom, who trades power, always says never short engineers. And so Joby is a collection of really smart guys who are making these electric vertical takeoff and landing planes, and initially for taxis to the airport, but eventually to do medium range. So anyway, so after the show, the stock popped about 15% on an FAA ruling. And then yesterday evening, they announced a $200 million deal that priced at 505. So let's just give a little context. All right. So last month, the stock was at 480. And since then, they raised $500 million with Toyota at 503 per share. And then they've raised now another $200 million at 505 per share. So they just secured $700 million as a company that burns about $450 million a year. So you got to think about this as a call option. Your decay is the burn. And so now they'll have, it's as of the filing last night, it said they had $700 million of cash at the end of Q3. You have the 2 tranches of 250 from Toyota over the next year. And then you have this 200. So you're basically up to like 1.3, 1.4 billion dollars. And so you're almost at 3 years of burn, call it 2.5 to 3 years of burn. And there's a lot of good positive catalysts in front of them. So I would be buying the stock here, much better than when I pitched it at 550 earlier. If the market was a little surprised, but I have to tell you, the key to these things are, can you raise capital without diluting the hell out of everybody, right? Like that's the calculus that needs to be determined. And if it was 480, and it spent a lot of time below 5 for the last since April, it's been some pops, but they just raised 700 million above 5. As long as they can keep raising at that level or higher, you're not going to be just shipping company it away. You guys all see those asymptotic shipping companies who have no respect for their shareholders.
Yeah. Well, then what's the burn on these in terms what's the end play? Do they have to get bought by Uber? Do they have to partner with them, or are they aspiring to be their own Uber for these things? I mean, it's beyond just being terrifying.
Their own Uber. They may be in the business of selling some of them. I talked to a friend of the show who's involved, and he's been involved in the name for a while, and he told me that he was out at their headquarters and that they had mentioned they may sell them to try and accelerate this. But the plan is to basically have a service like Uber where you go on an app, and then they come to your house in San Diego or in Malibu or wherever, and then you get to a local jump spot, and then it just takes you right on to LAX, and you come in. They have a deal with Delta as well, and and you go right to the terminal, and you don't go through the normal entrance to the airport. But Dave Lyons, the engineer who was on our show, said that they had recently completed on the verge of completing a prototype for a medium range plane. So that would be LA to San Francisco. I think the local one is challenging because of the pilots. I think the pilots will be working a lot, landing, always landing. But if they can get the regional, this can be a $100 billion company.
Yeah, I mean, the technology and the battery power you need to move mass from LA to San Francisco with an electric battery, I think we need to get another engineer on to talk about that, because air ambulance, I can get it. Okay, we're going to land in a city, get you to someplace really fast. Maybe shuttle from Newark Airport to JFK, or from here to there. But going any longer distance, that's. But then again, who knows?
That's why I started with don't short engineers. You get a collection of smart people. The thesis is they have an incredible collection of smart guys working on this, and you want to be long, smart guys.
And you start pumping GLPs into the water stream like fluoride, and all of a sudden, boom, you can carry 3-4 people to the airport at a fraction of the weight.
Yeah, but see, then you can, and in a little while, you'll just put them on a paper airplane and throw them, right? That's the. All right. Well, I think before we devolve, so you're picking up more Joby here if you didn't own it.
Much better. I mean, I have a background where I've done a lot of capital markets, equity capital markets stuff, and you like to be buying optionality when post the deal, right? Because think about what a stock that burns cash, that's an option. The equity is an option. And so when you extend the life of an option, you have more value because there's more, the distribution widens. And so in essence, the volatility rises and the value of the option rises. And so that's the construct of how you should think about these things.
Okay, so but in a nutshell, you like Joby Aviation as a
Yeah.
hey, listen, it's an idea, it's a longer term thing. When you get chances like this where they do a deal and there's supply in the market and the stock's down, 10-15%, that's when you should buy it. So
Yeah, and just to round that off, I mean, I pitched it at 550 on Monday, and now it's at 525, but they got $200 million more in the bank. I'm buying at 525 with $200 million more for a cash burner all day of the week versus 550, And so they also got the positive from the FAA. So you have two positives.
To be fair, they did issue stock for that. They did issue stock. To be fair, they did issue stock for that extra cash. So you are getting diluted a bit.
Agreed,
right?
but I'm saying if I'm sitting here watching me talk about it right now, this is a much better buy today than it was when I pitched it on the show earlier this week, which is why I felt I should come back on and talk about it. It wasn't that I want to keep talking about the same name in 1 week. It just a lot happened in the last couple of days for the name.
All right. Well, let's wrap it up here, unless anyone has questions for anyone else. So we have Charlie Peabody saying, "Hey, some cannabis stocks. Let's take a look at them. This might be a good longer term play." TKO, Jeff is buying it today on this misreaction to a deal. Kevin Baker loves silver, loves gold too, but today I was talking about silver ETF. Bob Morris, Range Resources is on the radar. He thinks he might be playing a little bit too cute and should just buy it today, but he's just waiting for a better situation. Did I have that right, Bob?
That's good.
Okay, good. Okay, but not great. Ben Fry is going high on Joby. And if you're interested in learning more about these, we talk about it all day in the chat. We write them up. It's wallstreetbeats.com. I'm David Maris. Have a great weekend, everybody.
See you, folks.